Now, before we hop in the charts and go over some examples, we must first define what market structure is. Market structure is going to be the way price action moves over time, forming patterns that reveal the market's behavior. Market structure helps traders read and interpret price movements, enabling them to make more informed trading decisions by identifying trends, reversal, and key price levels. Also, stick to the end to see exactly how I use market structure and my strategy. Now let's get into some of these terms here. First, we have your swing highs and your swing lows. These are going to be the peaks and valleys of price movement, marking potential turning points and trends. Then you have your lower highs and your lower lows. In a downtrend, these identify points where price fails to break above the previous highs and moves lower than previous lows. Now, opposite of that, you have your higher highs and your higher lows. In an uptrend, these identify points where price has moved higher than previous highs and where it retraces but still stays above previous lows. Now put these together, you're going to get your uptrend, which is your bullish market, a series of higher highs and higher lows indicating buying pressure and general upward movement. Now opposite of that, you have your downtrend or your bearish market. This is a series of lower highs and lower lows indicating selling or general downtrend movement. Now in the middle of both of those, you have your consolidation or your ranging markets. It's a phase with little direction of movement where price bounces between support and resistance, signaling indecision in the markets. Now let's hop into our market structure patterns a little bit. You have your trend line or your trend line breaks, which a trend line break can indicate a potential trend reversal or weakening of current trend. Then you have your double tops and your double bottoms, two peaks that fail to break above or below a level, signaling a possible reversal. Then after that, you have your inverse head and shoulders or your regular head and shoulders, reversal patterns that form with three peaks where the middle peak is the highest in the head and the shoulders or the lowest in the inverse head and shoulders, often indicating trend exhaustion. Now we have your breaker structure or your BOS, when price action breaks a previous high or previous low, indicating a potential shift in trend. Now let's hop into our support and resistance. First, you have your support where price trends to stop falling, indicating a strong buying area, or your floor. Then if you have a floor, you have a ceiling. That's going to be resistance, where price tends to stop rising, showing a strong selling area. I like to call these my floor and my ceilings because, as price hits that floor, it likes to bounce up and you have your ceiling. But you can always break through your ceiling, you can always break through your floor, making it the new ceiling, finding a new floor. Now that we know the terms, let's hop right on the charts. Start on the market here on the left. You have your downtrend or your bearish market. Here you have your lower low and your lower highs. This is the lower low because it is lower than the previous low. Then you have your lower highs. This is a lower high because it is lower than the previous high. What would this one be? A lower low because it is lower than the previous low. And you have your lower highs and your lower low. Now let's talk to our bearish market or your uptrend market. This is going to be a series of higher highs and higher lows. This is a higher high because it is higher than this high. This is a higher low because it is higher than this low. Higher high because it is higher than this high. Then you have higher low because this high is lower than this one, but it's still higher. Then you would have a higher low because it is higher than this high, still lower than this high. Then you have your higher high. Now these are your bearish and your bullish market. This is about 50% of the market combined. Your next is going to be your consolidation or your ranging market. This is generally going to be your support and your resistance. So your support here, which is your floor, then you have your resistance, which is your ceiling or your roof. Now this is generally how you want to trade this is you want to wait till price hits your floor. Then you would take a buy. Now you would wait, and then here you can either take profit and you can go in for another sell. A nice little gem or key point when trading these, you don't want to take your sell or your buy when you're in the middle of a ranging market. There's no telling what can happen. When price is really moving in this type of market, it can go here and then it could go back up before it goes back down. It's not going to automatically tap here or tap here and then go straight to the point. Now this is a good example of your ranging market. Now let's get into our reversals here. Now this market is going to show you reversals and your breaker structures. Here you can see we are in a clear downtrend because we're creating lower lows, lower highs, lower lows, and lower highs. Now this is a lower low, but when we break our previous lower high, we have now created a higher high because this high is higher than this high. Now this is a breaker structure. It has created a higher low, a new higher high, a higher low, and a higher high, creating an uptrend. But look here, we have a new breaker structure breaking this low. Now this could possibly be a lower low, a lower high. Now it could continue to a down market, creating another lower low, or it can just hop in a range, honestly, or it can create a new higher high or continue the trend. Now, this all looks easy when drawn out like this. Now see what it actually looks like with candlesticks. Here, we have an easy uptrend. How can I tell this is an uptrend? One, it's kind of easy that it's going up. Here we have a higher high, a higher low, a higher high, a higher low, because this does not break this low. Then we broke these highs, creating higher highs. And then we have a higher low, because this has still not broken these lows. Then we have a higher high and a higher low. Higher high and then higher low. Then we get a little bit of breaker structure here in this area, but price continues to go back up, breaking these highs. So I thought about a little bit of reversal here, but I said, no, we're just going to bounce off here or a trend line and continue up. Now that's one market, that's our uptrend market. Next, we have our consolidation or a ranging market, where prices like to move up and down, no clear direction of where it wants to go. Here you see, we have our ceiling as price has tapped here 1, 2, 3, 4 times. And if you go and zoom in a little closer, it's a little bit more than that. But you see how when price taps the ceiling, it reverses. Then we have our floor, and this is kind of subjective of where you want to put your floor. You could put it here as well. As you see, we have multiple touches, 1, 2, 3, 4, 5, 6, 7. Right here, if you zoom in, when price touched it, it went back up. And then you have your floor being broken, tested up again, break through, came, bounced off of like a floor, and then went to the new ceiling. Again, you can also always ask questions in the comment box. I also don't like to sit here and just go over the charts like this. I'm always down to hop on a 1v1 call. So if you're interested in that, you can always DM me on Instagram, or you can join the free Discord and contact me there, where I'm open to do a couple one-on-ones for free. Now that we went over our upward and our ranging market, next we have our bearish market, our downtrend market. See here, you have your lower highs and your lower low. Lower high, lower low. Now this is a lower high because its style is higher than this peak, but it's not higher than this. So it is a lower high. Then we broke here, lower than this, low. Then we start to move a little bit sideways here, lower high, because it is lower than this one, but it's still higher than these. Then we get another break, which is a lower low here. Now those are our 3 important markets. If you can understand these and then watch how price moves, if you trade in the direction on the higher time frames, say in the 1 hour, the 4 hour, the daily, it's a down market. On your 5 minute or your 1 minute, wouldn't it be smart to kind of trade in that direction? Yes. Now that we understand our markets there, let's get into our swing highs and our swing lows. Our swing highs and our swing lows are kind of like I would call them like U's. That's kind of how I learned them. It's going to be a 3 candle peak. So like this is a good swing high because you're gonna need 3 candles. One, and then you're gonna need a peak. Remember our peaks and valleys, our peak and valleys. This is a great example here. This is a good one. Swing low, swing high, swing low. This is a good swing high. It forms like a peak there, like a mountaintop. Nice peak. So kind of look for 3 candles where you see one peak, that middle candle kind of peak. So see, 1, 2, 3, our middle candle is our lowest one here. It's gonna be your swing low. This is a great swing high right here. Boom. 3 candles, 1, 2, 3, the middle one peaks. What I mean by that is, let me see, you can't just choose a random 3. So like these 3 candles, 1, 2, 3, but these are all flat. You don't see like a clear peak, not a consecutive 1, 2, 3, 4, 5, 6 candles. Kind of creates this peak, but you need 3 candles for your swing highs and your swing lows. Now, these are some on chart examples. Again, if you have more questions and like for me to go more in depth or have one-on-one coaching, you can contact me in my DMs on Instagram, or you can contact me in the Discord section and just shoot me a quick DM and we can find some time and I can hop on the charts and answer some questions. Now, if you made it to the bonus content, this is exactly how I use market structure, and my strategy. Now, if you made it this far, congratulations, because now you get to see exactly how I use market structure to become profitable month after month in my strategy and my trades. I mainly use breaker structure and figuring out the trends here. Here's a good example. Here's a great example of a double bottom. Boom, double bottom. So this is exactly how I use market structure in mine. First things first, I start trading at 8 o'clock every morning. So look a little bit like this. Boom, I'm looking at the chart. I do remember this day actually. I look at the chart, I say we have a double bottom. So clearly after a double bottom or a double top, this one being a double bottom, price 9 times out of 10 is going to continue up. It's going to continue up a lot. I can see here we kind of just bounced off of it. We're in the middle of it now, I'm thinking here. However, we are coming off of a downtrend, but that double bottom has burned me time and time again. So I know I'm looking for something up here. We have a swing high, swing low. I'm just looking for a new higher high or a new higher low to be created, or a breaker structure. So boom, we have a new swing. Looks like we're creating a new swing high here. Nope, but it looks like it has one off of the sell. I'm actually looking for buys, but say you hopped in sells here. Here's a good one off of a downtrend. You could have hopped in, but coming off of that double bottom, I'd rather take a buy. So I would have marked up something like this. Wait for price to come back in. Now, we wait for price to break this current candle right here, and we hope for a new higher high or a swing high. So we created a swing low. I got it somewhere right here. Stop loss below here. So the 1-to-1 got tapped. We'll see if this high gets taken out. And boom. That's how I use market structure to trade personally. I'll show you another example real quick. Something a little bit more cleaner. So just looking at it, comes from an uptrend, break a structure, big one here, but we're starting to regroup ourselves here. Regather. So we have higher high, higher low, higher high, break a structure, but we created a new higher high, break a structure. So it looks like price is kind of moving sideways here. For the most part, we're still going up. I will look for buys in this area. Boom, we broke highs here, so we created new higher highs. Right here, we created higher highs. This is my gap area. Wait for price to come back in that area. Boom, we got a tap. Then we have wait for a breaker structure, which would be here. A breaker structure and the trade loss. But you get the point. That's exactly how I trade there. If you have any questions or want to learn exactly how I trade one-on-one, you can send me a DM on Instagram, or you can join the Discord family and shoot me a DM to get one-on-one guidance for free. Now, if you want to dive into Forex trading for free, go ahead and check out my MTF Discord. I break down the basics so you can start trading and making money all from the free community. And when you're ready to level up, we got the inner family, where I'm actively trading from 8 to 11 a.m. Eastern Standard Time, get the best advice for you to become a profitable trader this year, and we have a blast while we make money. If you want to get started for free, link in the description down below. My goal is to create 1,000+ profitable traders and give them the opportunity to create their own futures. Join the MTF, link in the description down below.